Hello, this is Les Goldstein, President and founder of Personal Financial Strategies Incorporated, with your February 2019 economic update. So things did turn down after a very strong January and stocks continued to lose ground. Every session was lower during at least one of the weeks during the last month. A disappointing jobs report and a decline in Chinese exports made a case for a slowdown in global economic growth. In February, the Dow Jones Industrial Average recorded its longest losing streak since June. The Dow lost 2.2%, the S&P 500 was down 2.2%, and the NASDAQ snapped a 10-week winning streak and closed down the last week of February off 2.5% for the week alone. Last week's decline came on the heels of a dismal jobs report. The Labor Department reported that U.S. non-farm payrolls rose by just 20,000 in February, far below the $180,000 increase economists had expected. This marks the weakest month of jobs creation since September of 2017. The only saving grace was that the unemployment rate fell to 3.8%, while workers saw an 11-cent an hour increase in average hourly earnings, the largest gain since the end of the 2019 recession. The unresolved trade deal with China put additional pressure on the markets as well. China also reported a slowdown in exports, which has many economists concerned that the global economy is now finally slowing down. That being said, let's take a look at some of the things that influenced stocks over this last month of February. After a strong January, markets were up again in February. Despite tumbling a bit at the end, the Dow Jones gained 3.7% for the month, the strongest performance of all the three domestic markets available to us, S&P 500, Dow Jones, and NASDAQ. The advantage came against the backdrop of mixed economic and international signals. During the month, trade tensions with China continued to ease, as did concerns about the Federal Reserve's monetary policy. Congress and President Trump also avoided another partial government closure during February. The new bill will fund the government through the end of September. Economic data seemed just as split between positive and negative as far as updates were concerned for the month of February. We learned that home sales fell 1.2% in January. This was the lowest level since 2015 and 8.5% below where it was just 1 year ago. However, new home construction picked up in January after a weak showing in December. In addition, the latest data indicates that December's retail sales were lower than expected. The report detailed a 1.2% decline, the largest drop in retail sales since 2009. The next reading may provide more insight into true health of retail sales. December's report could be a part of a trend or simply a symptom of the month's historic market declines as well as the government shutdown. We expect to learn which direction we're heading as more data becomes available over time. On the positive side, we received the first reading of fourth quarter GDP, gross domestic product, and the results exceeded expectations. The consensus was the economy had grown about 2.2% for the year. However, initial data shows that it was actually up 2.6%. The report indicated that business investment was also higher than expected. In addition, consumer spending hit solid levels despite December's retail sales decline. So, as we move into March, we will watch where markets go and in what direction economic data is heading. Will retail sales and consumer sentiment pick up? I doubt it personally. One thing's for sure, we anticipate continued volatility over the intermediate term, which should benefit some of the strategies that we utilize for our clients here at PFS Wealth Management. No matter what the market does in the coming weeks and months, remember, your investment strategy should be based on your goals, risk tolerance, and time horizon. To sum this up, if you have any questions, you can always reach me, Les Goldstein, Rob Geller, and the PFS team at 847-268-3670. I'm extension 100, and you can always find me through Sherry Adelson at Sherry's at extension 100. I'm at extension 101. Thank you, folks, and we'll talk to you soon.